All right, today we're pulling back the curtain on a pretty unique geometric system known as market DNA. What we're going to do is walk through a case study, step by step. The asset we're looking at is copper, and according to the model, it's just kicked off phase one of a new cycle. Now, just to be super clear, our goal here is purely documentary. We are simply narrating the model's own process as it unfolds. Okay, let's get into it. So, in this explainer, our focus is squarely on the initial setup, phase one. Our whole goal is to visually document this process exactly as the system's own documentation lays it out. It is so important to remember this. We are not making any kind of predictions, we're not doing our own analysis, we're just showing you the inputs and the outputs straight from the source. So here's a quick look at our roadmap for this session. We'll start with a quick introduction to what the system is and where copper is at right now. Then we'll get into the nitty-gritty of the phase one entry plan and the risk management blueprint. After that, we'll check out the projected targets for a couple of different scenarios. And we'll even look at the potential paths forward, as defined by the model. Finally, we'll wrap things up with a very important official notice. All right, let's dive right in. The asset in the spotlight is copper. And according to the market DNA model, it's at the very beginning of a new cycle. So let's see exactly what that looks like on the chart. Okay, so here you can see it. As of February 17th, 2026, this analysis for copper is officially in phase one. If you look at the chart, you can see the price action interacting with the system's geometric shapes. You'll see labels like triangle 3 and that big trapezoid. These shapes are basically the visual framework for the whole model, and according to the system's rules, the event that actually triggered this phase was the price hitting that level marked M. So what does being in phase one actually mean? Well, this phase is all about a very specific entry plan. The documentation points to two distinct entry levels. Let's take a look at the actual numbers. Here they are, the two entry points for phase one. The first one, the primary entry, is labeled M, and it's set at 5.6613. Then there's a secondary entry, labeled PC, which is an optional level at 5.418. Now, what's really crucial to understand is that both of these levels fall under the phase one umbrella. Hitting PC doesn't start a new phase, it's all part of this initial plan. Okay, so once the entry levels are defined, the very next step in the process is, of course, risk management. The system has a specific set of inputs that it uses to calculate the position size. And this is all based on a documented hypothetical scenario. This table lays out all the ingredients for that hypothetical risk calculation. It starts with a hypothetical capital of $100,000. Then it sets a maximum allowed drawdown of 5%. That's the hard risk limit. The model uses a time window of 20 days, which it calls the trapezoid time duration. You see a risk coefficient set to 2. The mean entry price between those two levels we saw is about 5.54. And lastly, the contract size is set at 10,000 units. So the big question is, how does the model put all those pieces together? Well, the documentation is very explicit about this, and I'm going to read this part directly. Both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size. That's the core of the risk calculation right there. And here is the number that calculation produces. Based on all those parameters we just went through in the risk blueprint, the system determines that the value for each trade size is 0.21. This isn't a random number. It's the direct output from the model's risk management rules. All right, the system has defined the entry and calculated a trade size based on its risk rules. So what's next? Well, the documentation actually outlines some potential outcomes. These are based on what might happen if different target levels are reached. Let's check out the two main scenarios that are documented. Okay, so here are the two what-if situations laid out in the plan. Scenario 1 is the simpler one. It assumes only the primary entry, M, gets triggered, and there's a full exit at a target called T3. Scenario 2 is a little different. This one assumes that both the primary and the secondary entries get hit. For this scenario, the exits are documented at two different targets, T2 and T3. And here's how the numbers break down for those two scenarios. In scenario 1, the expected total profit comes out to just over $950. That works out to a 0.95% return, or an annualized return of over 17%. Now look at scenario 2, where both entries are triggered. The expected profit jumps to over $2,000. That's a 2.04% return, which when annualized comes out to a pretty significant 37.23%. So,
That's the complete setup for phase 1. But what's supposed to happen after this? Well, the model also documents a potential sequence of phases that might follow. And I have to say it again, this isn't a prediction. It's just the logical path laid out by the system's own internal rules.
This brings us to a key question. What are the potential paths for this cycle? According to the market DNA model itself, there are 2 defined sequences that could play out from here. Let's break them both down. First up is what the documentation calls the normal path. It starts, of course, with phase 1, the entry, which is where we are right now. The next step would be phase 2, which is defined as a contact with the mirror line. From there, it would move to phase 3, an N-level event. And finally, the cycle wraps up with phase 4, which is completion at the trapezoid top. But there's also a documented alternative path. This one also kicks off with phase 1, just like before. But here's the twist. In this sequence, it's possible for phase 3, that N-level event, to actually happen before phase 2. If that happens, then phase 2, the mirror contact, would follow. And just like the normal path, the cycle would still finish up with phase 4 at the trapezoid top. All right, before we finish up, it is absolutely essential that we go over some official notices. These are mandatory disclaimers. They are here to make sure this information is understood correctly, as a documentation exercise and nothing more. So please, pay close attention to the following points. First and foremost, this is not financial advice. These analyses are created for documentation and public verification purposes only. Any risk management decisions must follow the user's own specific instructions. The system itself prohibits the use of leverage above 10. And finally, please do not invest essential personal funds. And that brings us to the end of our visual documentation of the phase 1 setup for copper, according to the market DNA method. We've walked through the entry plan, the risk blueprint, those projected scenarios, and the potential paths forward. If you'd like to see more documentation or other case studies using this method, you can visit the source website shown right here. Thanks for tuning in.